Hello, welcome to European Open Briefing for Thursday, May the 17th. I'm Rafi Boyajan, currency analyst at XM.com, and we're going to be taking a look at what's happening in the currency markets today. The US dollar continues to rise to fresh multi-month highs. It's reached a new 5-month high after the 10-year yields broke above the 3.1% level. The euro, though, continues to slump. It's now fallen below the $1.18 level amid political uncertainty in Italy. The pound, though, is firmer following reports that the UK could stay in a customs union after Brexit. The Australian dollar is also up following some positive job numbers out of Australia this morning. But let's get started now with the US dollar. We can see the dollar index yesterday climbing to a 5-month high of 93.63. It has somewhat eased back from those highs since then. It's currently trading around 93.36. Dollar yen, though, we can see this morning broke above the 110.50 level, rising to near 4-month highs. It's currently trading around 110.53. So US Treasury yields continue to head higher. Yesterday we had more upbeat data out of the US. Industrial production rose by more than expected in April, and housing data was also fairly solid. The 10-year yield has now has risen to fresh 7-year highs of 3.122%. There's also optimism regarding those talks between the US and China, which are due to start today. It was reported that Trump's trade advisor Peter Navarro, who's also a very strong critic of China, has been moved to a more minor role in this week's negotiations, so as not to jeopardize those very important talks. So there is optimism that there will be some sort of a breakthrough there. If you look at the European currencies, though, it is not looking so good. The euro yesterday fell to 5-month low of $1.1761. This came after it was reported that the two anti-establishment parties, Five Star Movement and the League, which are in talks to form a coalition. So their coalition program included plans to request a debt cancellation from the European Central Bank for debt up to 250 billion euros. This was, though, later denied by the parties. So despite that, the euro didn't really recover that much. There's still concerns about that coalition, although those talks haven't ended yet. It's looking pretty likely that the two parties will in fact form the next government in Italy. So they also plan to increase spending, which is a big concern given that Italy already has a very high national debt level. And it's also being reported that they want the EU to have some sort of an opt-out mechanism for any country that would wish to leave the euro. So that's also raising concerns there. We're seeing a spike in Italian bond yields. The euro at the moment, though, it's somewhat steady around the $1.18 level. If you look at the pound, yesterday we saw the pound bouncing higher. This came after reports that the UK government has decided to stay in a customs union until after 2021. So the transition deal ends actually at the end of 2020. But given the fact that the UK will need time to implement border controls for any sort of post-Brexit trade deal, the UK will likely need to stay in a customs union until at least at the end of 2021. But now those reports are saying that the UK may want to extend that beyond 2021. Though the UK government has this morning denied such reports, the most likely outcome we're going to see is that the UK will want to maintain close alignment with the customs union. So that's why we're seeing the sterling fall back somewhat from those highs where it reached 1.3570. It's currently trading just above the $1.35 level. Turning to the commodity-linked currencies, the Aussie and the Kiwi, both trying to recoup some of their recent losses this week. They've been trending higher since Tuesday. We are seeing firmer commodity prices, so apart from oil, metal prices are also looking somewhat firmer this week. Plus, we're seeing equities higher, so that's boosting risk sentiment. Of course, commodity-linked currencies are very sensitive to overall broader market risk sentiment. So global equities are recovering this morning after a positive close in Wall Street yesterday. We're seeing Asian markets close higher today, and of course the easing of tensions between the US, trade tensions between the US and China. Plus, we did get some better than expected employment gain in Australia in April, although the unemployment rate did rise slightly. We saw a big surge in full-time employment, so that's boosting the Aussie. It's currently trading around 0.75 at 30 at the moment. Earlier it had risen to around 0.7550. The New Zealand dollar is also up after the New Zealand government raised its projected surplus, government surplus for the next fiscal year. It's also planning to raise spending as well, which is expected to stimulate the economy. We expect to see higher growth. Although for the current fiscal year, growth will be lower, but for the next fiscal year, growth is expected to be much stronger. Although we also had some producer price data out of New Zealand, and that is somewhat weighing on the Kiwi. Earlier, the Kiwi had jumped as high as 0.6936. At the moment, it's trading just below the $0.69 level. And finally, looking at the Canadian dollar, so the loonie is also, like the Aussie and the Kiwi, continuing its reversal since Tuesday, when it had fallen close to the 1.30 level. It's now firmed to around 1.2750 to near 1-week highs. Yesterday we saw manufacturing sales rising far more strongly than expected in March. So that has boosted expectations that the Bank of Canada could soon raise interest rates. Higher oil prices are also helping the loonie, which with this morning are rising to fresh 3.5-year highs. Brent crude is now approaching the key $80 a barrel level. So yesterday, the EIA weekly report showed a surprise, a bigger than expected bigger than expected draw in US crude stocks. The day earlier, we had seen the API report showing a surprise build. So oil, that has been positive for oil prices. Plus, the OPEC yesterday said that compliance within OPEC members in April reached 149%. So this means that OPEC has cut output more than it needed to. So that is also boosting oil prices. We can see Brent crude currently trading around $79.50 a barrel. And finally, looking at today's economic calendar, the main data later will be US weekly jobless claims, but we will see a number of central bank speakers. That's it from me. Thank you very much for watching and have a great day.